RESPA and TILA practice test. Question 1. Nora is studying a rule concerning a government-sponsored enterprise that buys qualifying mortgages and supports secondary-market liquidity. Which term should be chosen? Option A, acceleration clause. Option B, Freddie Mac. Option C, secondary mortgage market. Option D, FHA-insured loan. The correct answer is option B, Freddie Mac. It establishes standards for loans it is willing to purchase. The organization helps connect mortgage originators with capital-market investors. Retail borrowers normally obtain funds from lenders rather than directly from this enterprise. Question 2. When a duplex transaction involves pledging property as collateral while retaining possession and use, which answer identifies the controlling concept? Option A, pity. Option B, discount point. Option C, hypothecation. Option D, TILA. The correct answer is option C, hypothecation. The borrower grants a security interest without physically delivering the real estate to the lender. The concept differs from transferring full ownership to satisfy the debt. Default can allow enforcement against the collateral under the security instrument. Question 3. A practice question describes a charge imposed under the loan terms when principal is repaid before the permitted time. Which response is best in the inspection period described? Option A, due on sale clause. Option B, pity. Option C, TILA. Option D, prepayment penalty. The correct answer is option D, prepayment penalty. Borrowers should review the note before refinancing or selling. The provision compensates the lender for early termination of expected interest income. Its enforceability and disclosure are controlled by law and the loan program. Stressed about your Maryland real estate? We can take Maryland real estate for you remotely and undetected. We always guarantee a pass and payments only after results. To send us an email, scan the code or tap the link in the description and let's get it done. Question 4. During a property management audit, which principle is illustrated by a loan with an interest rate that remains unchanged for the stated term? Option A, fixed rate mortgage. Option B, Ginnie Mae. Option C, annual percentage rate. Option D, conventional loan. The correct answer is option A, fixed rate mortgage. Taxes, insurance, and association charges can still change the total monthly housing expense. The borrower trades rate certainty for the pricing available at origination. Principal and interest payments are predictable when the loan is fully amortizing. Question 5. Which answer states the concept associated with the federal regulation implementing consumer credit disclosure requirements under the Truth in Lending Act? Option A, amortization. Option B, Regulation Z. Option C, discount point. Option D, equity. The correct answer is option B, Regulation Z. It does not regulate brokerage agency relationships. Triggering terms in an advertisement can require additional information. The regulation governs advertising and disclosure of credit terms. Question 6. A buyer representative handling a single-family home in Cumberland must identify a mortgage made by an approved lender and insured by the Federal Housing Agency. Which choice is correct? Option A, fixed rate mortgage. Option B, discount point. Option C, FHA-insured loan. Option D, adjustable rate mortgage. The correct answer is option C, FHA-insured loan. The insurance protects the lender against qualifying borrower default. Borrowers pay required mortgage insurance charges and must satisfy program standards. The government does not directly lend the purchase funds in the ordinary transaction. Question 7. During a contract revision for an office building in Westminster, Yasmin needs to identify the rule described as the federal law addressing settlement-service disclosures, escrow practices, and prohibited referral arrangements for covered mortgage transactions. Which answer applies? Option A, secondary mortgage market. Option B, VA-guaranteed loan. Option C, adjustable rate mortgage. Option D, RESPA. The correct answer is option D, RESPA. The law restricts kickbacks and unearned fees connected with settlement services. Covered consumers receive information about loan and closing costs through required disclosures. It does not set real estate commission rates or guarantee loan approval. Question 8. A property manager is reviewing a waterfront parcel in Hagerstown. Which term describes prepaid interest equal to 1% of the loan amount? Option A, discount point. Option B, fixed rate mortgage. Option C, prepayment penalty. Option D, loan to minus value ratio. The correct answer is option A, discount point. Borrowers may pay points to obtain loan pricing offered by the lender. Points should be distinguished from origination charges and down payment. The dollar cost depends on the principal amount rather than the property price. Are you looking for Maryland real estate actual questions? Visit our website pokerexams.com to access Maryland Real Estate Study Guide with actual questions and answers. Scan the QR code or click the link in the description to get Maryland Real Estate Answer Key today. Question 9. At a marketing review, a Maryland exam candidate encounters the following description: the market in which existing mortgage loans are bought and sold after origination. Which concept is being tested? Option A, balloon payment. Option B, secondary mortgage market. Option C, pity. Option D, Ginnie Mae. The correct answer is option B, secondary mortgage market. The borrower generally continues making payments to the designated servicer. Loan sales replenish lender funds and support continued lending. Investors evaluate the credit and payment characteristics of the loan pools. Question 10. Priya is assisting with a historic residence transaction in Salisbury. Which principle applies when the facts involve a mortgage provision requiring release of the lender's security interest when the secured debt is fully paid? Option A, promissory note. Option B, Regulation Z. Option C, defeasance clause. Option D, Freddie Mac. The correct answer is option C, defeasance clause. The borrower is entitled to evidence that the encumbrance has been discharged. The provision protects clear title after repayment. Satisfaction of the obligation removes the lien created by the security instrument. Question 11. Which answer most accurately identifies a loan whose interest rate may change according to an identified index and margin in a real estate transaction? Option A, TILA. Option B, acceleration clause. Option C, amortization. Option D, adjustable minus rate mortgage. The correct answer is option D, adjustable minus rate mortgage. Borrowers should understand the initial rate, adjustment rules, and maximum exposure. Payment amounts can rise or fall as the rate changes. Rate adjustments occur at stated intervals and may be limited by periodic or lifetime caps. Question 12. A question arising during per-listing meeting concerns gradual repayment of a debt through scheduled installments of principal and interest. Which choice gives the best classification? Option A, amortization. Option B, Ginnie Mae. Option C, defeasance clause. Option D, mortgage. The correct answer is option A, amortization. Each payment is allocated according to the loan terms and remaining balance. Early payments on a level minus payment loan usually contain more interest than later payments. Full repayment occurs at maturity only when the schedule completely reduces the balance. Question 13. While analyzing a small apartment building, Imani must apply the concept involving a government-sponsored enterprise that purchases qualifying residential mortgage loans in the secondary market. Which answer should be selected? Option A, Ginnie Mae. Option B, Fannie Mae. Option C, hypothecation. Option D, deed of trust. The correct answer is option B, Fannie Mae. The organization does not usually make retail home loans directly to individual buyers. Its activities support liquidity and standardization in housing finance. Loans must satisfy applicable eligibility and documentation standards. Question 14. Which real estate term is defined by a loan provision allowing the lender to demand repayment when the secured property is transferred without permitted consent? Option A, loan minus to minus value ratio. Option B, FHA minus insured loan. Option C, due minus on minus sale clause. Option D, discount point. The correct answer is option C, due minus on minus sale clause. The clause limits the borrower's ability to transfer the property subject to the existing loan. A buyer should not assume the existing financing can remain in place. Federal and state rules may create exceptions for certain transfers. Question 15. In a transaction involving a condominium unit, which rule controls when there is a lender charge for processing, underwriting, and creating a loan? Option A, fixed minus rate mortgage. Option B, deed of trust. Option C, VA minus guaranteed loan. Option D, loan origination fee. The correct answer is option D, loan origination fee. Settlement disclosures identify the amount and party responsible for payment. The fee is commonly stated as a percentage of the loan amount or as a flat charge. It is distinct from prepaid interest used to alter the note rate. Question 16. A tenant asks about the percentage relationship between the loan amount and the property value used by the lender. Which answer provides the legally accurate concept? Option A, loan minus to minus value ratio. Option B, PITI. Option C, private mortgage insurance. Option D, conventional loan. The correct answer is option A, loan minus to minus value ratio. A lower ratio generally means the borrower has more equity in the transaction. Lenders use the measure to evaluate collateral risk and insurance requirements. The ratio is calculated by dividing the loan by the applicable value or purchase minus price measure. Question 17. Owen encounters a standardized expression of the cost of credit that includes interest and certain finance charges during a buyer consultation. Which principle should guide the analysis? Option A, loan origination fee. Option B, annual percentage rate. Option C, balloon payment. Option D, TILA. The correct answer is option B, annual percentage rate. Required calculation rules determine which charges are included. It is not necessarily identical to the note interest rate. The figure helps consumers compare loans with different fees and rates. Question 18. Which choice best matches the description coverage protecting a conventional lender when the borrower has a high loan minus to minus value ratio? Option A, RESPA. Option B, balloon payment. Option C, private mortgage insurance. Option D, conventional loan. The correct answer is option C, private mortgage insurance. The premium compensates the lender for part of the default risk. It does not protect the borrower from foreclosure or eliminate the debt. Cancellation rights depend on law, payment history, and the remaining balance.
Stressed about your FCLE? We can take FCLE for you remotely and undetected. We always guarantee a pass in payments only after results. To send us an email, scan the code or tap the link in the description and let's get it done.
Question 19. During review of a townhouse in Colombia, the parties discuss the percentage of gross income committed to qualifying monthly debt obligations. Which term applies? Option A, regulation Z. Option B, amortization. Option C, equity. Option D, debt minus to minus income ratio. The correct answer is option D, debt minus to minus income ratio. The measure helps evaluate repayment capacity rather than collateral value. Lenders compare housing expense and total recurring debt with income. Program guidelines determine which debts and income sources are included. Question 20. An exam scenario presents a large final payment due because scheduled installments did not fully amortize the debt. Which answer is most accurate? Option A, balloon payment. Option B, FHA minus insured loan. Option C, private mortgage insurance. Option D, debt minus to minus income ratio. The correct answer is option A, balloon payment. The borrower makes periodic payments that leave a remaining principal balance at maturity. The term must be disclosed clearly in the loan documents. Refinancing risk increases if the borrower cannot pay the final amount when due. Question 21. A licensee preparing for a marketing review must recognize a security instrument creating a lien on real estate to secure repayment of a loan. Which concept does this describe? Option A, defeasance clause. Option B, mortgage. Option C, amortization. Option D, acceleration clause. The correct answer is option B, mortgage. The debt itself is evidenced by a separate repayment promise. The borrower retains ownership while granting the lender a security interest. Foreclosure procedures may be used if the obligation is not performed. Question 22. Which answer correctly classifies a situation involving the federal credit law requiring clear disclosure of borrowing costs such as annual percentage rate and finance charge? Option A, hypothecation. Option B, adjustable minus rate mortgage. Option C, TILA. Option D, defeasance clause. The correct answer is option C, TILA. Certain residential credit transactions also carry rescission rights. The law regulates disclosure of credit cost rather than property condition. The goal is meaningful comparison of credit terms before the consumer becomes obligated. Question 23. At a lease negotiation in Rockville, Zane explains a federal corporation that guarantees securities backed by qualifying government-insured or guaranteed loans. Which real estate principle is involved? Option A, PITI. Option B, secondary mortgage market. Option C, discount point. Option D, Ginnie Mae. The correct answer is option D, Ginnie Mae. Its role concerns the securities rather than direct consumer lending. The organization does not buy conventional mortgages in the same manner as the major sponsored enterprises. The guarantee supports mortgage-backed securities containing approved loan types. Question 24. A transaction file for a retail suite raises an issue involving a mortgage program providing an eligible veteran borrower with a federal guarantee benefit. Which answer best resolves the classification? Option A, VA-guaranteed loan. Option B, TILA. Option C, adjustable rate mortgage. Option D, prepayment penalty. The correct answer is option A, VA-guaranteed loan. The guarantee reduces lender risk and can permit favorable financing terms. Eligibility and property standards must be satisfied. The program is not a direct grant of the purchase price to the borrower. Question 25. Which concept should a listing broker apply to facts involving the owner's value interest after subtracting liens from the property's market value? Option A, amortization. Option B, equity. Option C, Freddie Mac. Option D, hypothecation. The correct answer is option B, equity. It can decline when market value falls or additional debt is placed on the property. The owner's net value can increase through principal reduction, appreciation, or improvements. The amount is not the same as cash flow or taxable income.